Hello traders, Gary Wagner here, just about 12:30 in Honolulu, 5:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is February 14th, Valentine's Day, and this is the Daily Report for Gold and Silver, our weekend review. We live in an interconnected world where one country will affect another country in terms of the global economy itself. The outbreak of the coronavirus, while predominantly in China, has an opportunity to spread. But even though it might not, which is of course our hope, a slowdown in the Chinese economy will affect other economies, and it will be a chain reaction. So the quicker they find a treatment and a cure, the quicker we can get back to the financial world as we know it and not worry about this particular issue now. It was supportive of gold this week. We had a nice move today. We gained on the week, but the vast majority of those gains occurred today. Let's take a look at our current pricing and then to our technical studies. The coronavirus outbreak has definitely affected market sentiment in regards to the safe haven asset gold. Gold had moderate gains this week of about $12, but as you can see on the screen, 8 of that $12 occurred in a single trading day, meaning today. Gold up $8.10 at $1586.90. Silver also had a nice showing, about the same in terms of percentage gains, about 0.5%, almost 10 cents, trading currently at 1771.5. However, the two other white precious metals did close lower today. Palladium down $15.80 at $23.35, and lastly, platinum down about 0.75%, a $7 decline at $967.60, and that was all within some very, very mild headwinds from a slightly higher U.S. dollar. But what is interesting about the dollar is not the small net gain, it's the fact that it's back to 99 on the dollar index. Traders, let's take a look at our technical studies. The first chart that we're going to look at today is a daily candlestick chart of the continuous contract of gold futures. Of course, that represents the April contract. While we have seen the market move higher, as I said, about $12 today, when we look at what I consider to be a fairly critical trend line, and it's a moving target because it follows that series of higher lows as we move up in the market. You can see that at one time during this week, I believe this was Monday, we came right to the top. Tuesday, Wednesday, of course, Thursday. Friday came close, but it did not break through that. That is telling me that we haven't had the kind of true breakout that I am looking for. Now, assuming that we do see this market continue to rise and we break above that particular trend line, this line right here, what would be the upside targets and what would be the levels of resistance that we would look at? Well, obviously, the first real level we would have to look at comes in right at around $1,600 per ounce. It is a psychological key level. It also is a level of this high right here. Above that is 1613, and that was the high achieved during the very, very short-term skirmish between the Iranians and the United States. But if it is able to move above 1600, my target in terms of where I think the market should go is going to be about 1632, and that is based on a 0.618 extension of the impulse wave number 3. And the way we are creating our data set is we're beginning at $1,265. It's down here. That is the price that came in May of last year. Taking it up to this top. This top, of course, occurs at 1565. And then we begin the extension from these lows here and here, and then extend upward. When we do that, we get a 0.618 extension at 1632 and the 78% extension at 1680. And so those would be the two targets that I think we could see a fifth wave conclude. That is what I am looking at in terms of my current model. This has been Gary Wagner. Wishing you, as always, good trading. Have a great weekend, a great Valentine's Day, and we will talk to you next week for the next daily update and review. Bye-bye.